You want an investment edge, but all you hear is noise, hype, and half-truths. Every signal is solid information, but only if you can see the bigger picture. This is where the Quasar magic happens. Weather, charts, news, all financial signals funneled into a single dashboard. Data alone isn't enough. Quasar Markets turns it into energy, sharp, clear, precise. Optimize with Quasar Markets today. Your edge when investing.
Good morning, traders. Welcome to Quasar Markets Live. You've got your man, Crypto Hondo here, Howard Greenberg, flying solo and fully caffeinated this morning. It is Monday, September 22nd. The big one today so far is the $100,000 H-1B visa fee jolt from the White House. Let me shut off the volume here on my TV. TikTok deal details are coming out with some surprising names, and Pfizer is buying its way into the weight loss race. We see gold at fresh records highs, silver ripping to 14-year highs. Crypto gets a big weekend shakeout with liquidations pushing us way down, and Warren Buffett is officially done with BYD after 17 years. We'll finish up with your week ahead game plan. I also have our man, Mr. Currency himself, Stephen Flanagan, coming on here earlier than normal to talk everything that's on a macro level and about what's going on with currencies around the globe. We have Jerome Powell speaking Tuesday and PCE inflation on Friday. Buckle up. We're getting ready to go here. Let me get my banners up. First of all, let's start with the policy bomb that detonated late Friday and rolled throughout the entire weekend. The White House says that new H-1B visa applications will carry a $100,000 fee. Key clarifiers from officials: it applies to new applicants only, not renewals or folks who already hold H-1Bs, and it's not annual. Think one time per petition. That's still an earthquake for tech and finance, where H-1Bs are the backbone of highly skilled hiring. And I got to say, I got a couple of different ways I'm looking at this. First of all, number one is that, it's a way that companies avoid paying the going rate for U.S. labor sometimes. While there are times that we definitely do not maybe have enough of the professionals to do this, that isn't always the case. Number two, I will point out, as I saw this morning, covered pretty well on a couple of the different Bloombergs and stuff. If you compare this to Singapore, which is, I believe, $7 million to get a visa, or 700,000, excuse me, to some of the others, this is actually cheaper, puts us less expensive than some other countries. And I've seen some analyst reports who think this will be a big deal, that you could see a large increase in the amount of people interested for it. If you're a large cap tech CFO this morning, you're starting to rerunning your staffing math. India does account for 71% of the H-1B holders, and we're already seeing selling pressure in Indian IT, Infosys, TCS, Wipro, HCL, all on margin fears if firms have to absorb all or part of that fee. Analysts sketch about a 100 basis points margin hit, and about a 6% earnings per share impact if models don't change. Expect to see some pivots also. You'll see some nearshoring to Mexico, Canada, more U.S. local hires and offshoring to India's global capability centers. So, if we zoom out here, economists worry this crimps the U.S. productivity. We've seen some warning that long-run U.S. growth could drift towards 1.5% if the skilled worker pipeline tightens. That's definitely a headwind to multiples over times if it sticks. Mr. Flanagan, I see you. Hey, Marilyn, how are you? Also, good to see you, Mr. Flanagan. We'll talk more about that. Definitely puts more pressure on India for sure. Um, and if you employ H-1Bs, travel advisors were flying this weekend. Some firms told workers not to leave U.S. pending clarity. And that's, put some policy volatility in the play. That's for sure. It will definitely put some volatility into play. Good morning, Ron. How are you doing today, my friend? Markets are at record highs. The Dow and S&P hit fresh peaks. After last week's quarter point Fed cut, the Dow and S&P closed at record highs Friday, with the Nasdaq tagging along. This morning, futures were softer so far going into the open. Currently, so you do see ticks starting to pick up a little bit, but the Nasdaq down about 32 basis points before the open. SPY indicated to open up about 25 basis points in the red. Also, gold did print a fresh new high here, 37.23 overnight. Silver broke above Steve's $44 an ounce, highest since 2011. So we'll have to find out from him whether he sold his silver or not. I doubt it, since the one thing I did see from Big Beat this morning is that he's queuing into, as we know, he has been rather banging the table that their market is over bought and that we're set for a pullback. He feels that the crypto pullback might be the predecessor to that. So just a note from Big Beat so far on that. With that also being said, not him only, but Morgan Stanley's Mike Wilson is out saying, careful, if the Fed slows down the pace of cuts versus what the market has priced in, we could get a correction. Watch for liquidity stress. The first signs show up in the overnight Fed fund spread and in the reverse repo and in the MOVE index for Treasury volume. So keep those on your dashboard this week. Whew, a lot to talk about. I need some more coffee here. And yes, our man, Mr. Powell. So he does speak tomorrow at the Greater Providence Chamber's Economic Outlook Luncheon. That's Rhode Island. For those that do not know, Providence, Rhode Island, right around midday tomorrow. We'll preview that setup and see what it means for Friday's PCE data. But, does Powell print a put tomorrow or not? That will definitely be a question to keep on the top of mind. A lot of tweet analysis this weekend, huh? A lot of tweet analysis, TikTok deal, definitely all over the news. That's all I saw on my timelines over the weekend. We got some more texture on the TikTok saga. The White House says that the U.S. board would be 7 seats, 6 American. Oracle would handle the data and security for the platform, and the algorithm itself would be U.S. controlled. That's a big line in the sand from what we see, and definitely a big change, I think, than what China and TikTok said. So as Mr. Flanagan said, another, shot across the bow of India earlier. This one, to me, while, it's already been discussed between the president and China officials, I do think that this one, again, is sort of, he's sticking to his guns on this. He did not fold. President Trump floated that Rupert and his son, Lachlan Murdoch, could be part of the U.S. investor group, possibly via Fox Corporation, alongside big tech money like Larry Ellison and Michael Dell. Corporate America meets geopolitical meets social video. It's still early and we're still in the rumor to term sheet territory, but it's a meaningful tell on where the control structure is headed. If this locks in, it sets a precedent. Foreign apps operating here under U.S. algorithm and data control That's not just TikTok. That could be a template for what we see in the future. So something to keep an eye on. What do you guys think? Are we going to get a deal done on TikTok, or does this thing just keep on playing out over the next, months? That's what I wonder. So far, we are about 15 minutes from the open here. Tick is slightly positive. Advanced decline, slightly negative 110, fairly neutral in general. We do see again the Qs or the NASDAQ set to open down about 30 basis points here today. SPY set to open down about 26 or a quarter of a point. Let's take a quick look to see what's going on across the mag. Nvidia set to open up down about a half a point. Apple has been all over the news this morning, as Big Beat talked about earlier, and he must be loving those. Although I know actually that I do want to point that out. I do know that Big Beat is out of his Apple 240 calls. I think maybe a little too early based on the fact that it is up 1.04% here this morning. And he did say he's totally out of Apple, and all the news that Apple has let a lot of its supply chain know that its sales on the new iPhones have exceeded expectations and to be ready to ramp up production. So we do see Apple up about over 1 percentage point here this morning. Microsoft and Google, Amazon, all scheduled to open to the downside, along with Netflix, right around a 0.5 percentage point for each of them. We see Meta slightly up and Tesla up about 1.1% here this morning. Maybe a winner based upon the news that Warren Buffett has divested completely of, or Berkshire Hathaway, of their BYD competition to Tesla's holdings here. We're going to talk more about that this morning. Again, if we look around the globe at the indices, crypto is, or at least Bitcoin, bouncing back a little bit here. Did see a big liquidation flush out over the weekend that we'll get more into. I am a buyer of the dip this morning. Personally, I do think it is good entries here to be had. I am going to watch and see on some of them what happens at 9:30. Do we see a continued sell-off by IBIT and the ETFs? And if so, could give us even a better entry. But it does look like we're bouncing back here. And we have bounced back significantly from the lows. Got down is below 112 on Bitcoin. Ethereum dropped down below 4,075 or so before bouncing back. As I mentioned, gold at an all-time high again, 37.22 here, 37.2840, punched a new all-time high overnight. Demand continues to be there, it looks like, in my opinion. I am reaching out, going to try to get our main man, Peter Thomas, on tomorrow to talk about what he's seeing in the metal markets. So hopefully we will definitely get him on this week. It's just a matter of which morning I get him on to talk about it. We have seen a little bit of a pullback again, continued slide on oil WTI down about 70 basis points here this morning. Same with Brett. So we're seeing that out of both of those. When it comes to the S&P, as of right now, all the different sectors of the S&P as covered by the Spider Select Fund set to open to the downside. Does look like energy, one of the bigger losers so far this morning, down over 1 percentage point. The only thing down over 1 percentage point so far. Overseas, we do see the Nikkei did finish up around 50 basis points overnight. And we have seen a small decline across European stocks, with the stocks down about 20 basis points overnight also. Excuse me. DXY, and like I said, we are going to have him in early today around 9:40. My main man, Mr. Flanagan, is going to come talk about the slide we've seen over the last few hours on the DXY. What does he expect to see next there? Sorry, there, just needed to put a quick note in. Okay, let's take a quick look here at what else is big news so far. On Main Street, membership clubs keep winning. I've been talking about it. I've seen the crowds at Sam's Club, Costco, etc. And what we're starting to see is those news come out here. New stores, sticky memberships, private labels are also driving volume up. And then, of all things that are moving the needle, also, each of those companies talking about how their food court has really picked up. So I did find that interesting. Another one I know that I am guilty of constantly having to throw more money into is, yes, Build a Beer, call it Revenge of Nostalgia. The company posted record revenue. Shares are up 60% year to date, flirting with a $1 billion market cap. I really wish Big Beat was here to talk about this one. And management is starting to lean into international and smaller pre-stuff lines to broaden the price ladder in a tariff noisy retail world. That's execution. So again, we've talked about it. Those are the places that are winning, and they're winning because the high-end consumer and low-end consumer are taking advantage of the offerings at these membership clubs and getting involved. Another one we need to talk about for sure today is our friends over at Pfizer. And as we know, Steve had been very negative on Pfizer in general, as they had not really performed very well when it's come to the weight loss drugs. Well, all that about to change. They just wrote a $4.9 billion check for Metsera, buying optionality in the GLP-1 obesity race after shelving one of its own programs earlier this year. The headline terms are $47.50 cash per share, about a 42% premium on Metsera's price currently, up to $22.50 in CVRs tied to trial and approval milestones. Metsera already ripped up 60% in the pre-market. Pfizer is only up slightly here, and actually now down slightly here this morning. But, we've seen that Lilly and Novo were the heavyweights. They ticked a little bit lower on this headline news also. So good to see Pfizer starting to find some, answers here. And we know that that is good. Other deals we're seeing out there, Compass is going to acquire Anywhere, which is Century 21 and Caldwell Banker, in an all-stock $1.6 billion move. Other things that we've seen this morning, Kenvue, which is Tylenol, is under pressure on reports that the administration will link acetaminophen to pregnancy autism. We'll hit the policy piece next. And then Sarepta is up 6% on a BMO upgrade, Applied Materials up on a Morgan Stanley upgrade, and Fox Corp bid on TikTok Chatter has them moving to the upside also. We'll say also IREN, IREN, nice move up about 9% here this morning in the pre-market. The only crypto-based name on the upside, quite honestly, most of the biggest laggards today, SBET, SharpLink, the Ethereum-based protocol, Galaxy Digital, heavily involved in the crypto area, down about 5%. Ford, their Solana-based treasury company, down 1.3. Gemini, down another 2.86. Mara. So again, most of the crypto names to the downside here this morning. We'll also mention JP Morgan, one of the bigger laggards, also down about 1.67. What I did notice is there is a ton of volatility at play. There is a lot of stocks that are up 4 or 5% today. There is a large swath of stocks that are down significantly. If we pull up here you can see that, these top 25, I think, that show up in the list only get you down to negative 1.72. And if you keep looking, you've got all of these down more than a half of percentage point. And then the same way, if we go to the winners so far this morning, it's a pretty big list here. And you've got a significant amount of companies up more than a half a percentage point again today. So we are seeing a tale of stock picking here. Didn't see so much one area, one sector that's tremendously winning when it comes to the upside. A lot of them are tech names. And then, of course, we're seeing a move up across some of the gold mining companies and such. Again, one of the things that has definitely got Kenvue down today, which is the maker of Tylenol, down about 3.71% this morning at 1766, is multiple outlets saying that the administration will announce today guidance linking acetaminophen use during pregnancy to autism risk, urging use only for fever early in pregnancy. Officials are also expected to spotlight leucovorin as a potential autism treatment, though researchers stress the evidence is early and limited. This is a significant shift from the long-standing guidance that acetaminophen is safe when used as directed. Expect pushback from medical organizations and from Kenvue themselves for sure. A Washington Post piece this morning calls leucovorin's promise real but fragile. Sorry to change my banner. It's tough when I'm all solo here. If the messaging outruns the data, volatility in consumer health and biopharma is possible. So keep your eye on that sector and what's going on here with that. And we know we've seen just a huge increase in the amount of autism. As I mentioned, volatility moving to the upside, and we are seeing that across the VIX, which has now jumped up to 16 here. Got as high as 1635 earlier here. But we are seeing volatility as there are some definite winners and losers in the stock market. 3 minutes from the cash open here, Q's down about 26 basis points. They are moving back to the upside, and I will say this, chart looks very similar to what we saw on Bitcoin this morning. While the flush was down, they've taken a pretty good move back up and now moving back towards the upside, sort of consolidating without picking a clear direction yet. So tech and Bitcoin moving still today in the same direction, it looks like. Space is back on everyone's mind. ASTS up 4.1%. Well, 3.75. Someone just sold off. But nice move to the upside. We are seeing some profit takings on that name now as they wake up. Coinbase, as I mentioned, crypto names in general falling down here as crypto dropped over the weekend. Was looking just to see if any of the other bigger names were moving one way or the other. Lennar Housing still in the downfall here. We know that after earnings, we saw a big push to the downside by Lennar and the other housing names, down another 1.94% here this morning. This one is a tougher one because, I think you've got more room to the downside before I'd be a buy the dip person. But at some point, as we saw recently with the news, and the Fed cut, at some point, those names are going to bounce back pretty well. We are 1 minute from the open here. I'm going to take a few seconds here to have a quick drink of my coffee, and we'll be ready to get going. As I did say, Bitcoin is trading back down around 113 here after a weekend flush. We saw about 1.6, $1.7 billion in long liquidations across venues. Funding rates have now cooled, and quite honestly, we see a lot of negative funding rates, meaning that the shorts are now paying the longs to be in the trade. So we'll keep an eye on that. Could mean that you could see a nice little bounce back recovery here this morning. Could give you a little bit of a snap back squeeze back up towards, and we are open back up towards 115, but that becomes the area you have to start watching at. First move on the tick, definitely negative minus 549. Q's first move is to the upside, though. Dow Jones opens up down about 34 basis points so far. All four major indices to the downside. Dow Jones down 34 basis points. S&P down 21 basis points, and the Q's now down 23 basis points. The small caps are down 28 basis points. VIX is up around 16.05. Gold seems to be holding up pretty well here at the open. Same thing. Silver seeing a little bit of profit taking. Not surprised after seeing an 11-year high earlier this morning. Bitcoin back below 113 here. Like I said, wouldn't surprise me to see a little bit of a sell-off here as IBIT and stuff start to see a little bit of selling. Marilyn pointing out that Micron up. Haven't really looked at the chips too much so far this morning. And we do see a mixed bag there. ASML also up about 3.3% here. Micron's given up some of those. Well, still up about a half a percentage point here this morning, but it is pulling back a little bit, seeing some profit taking after a nice little jump up on the cash open, like you mentioned. Oh, big sell off there. Let's keep our eye. Tick down about 500 here, still moving to the downside. Qs are moving to the upside, though. So a little bit of a buy the dip in the Qs. 600.05 would be a new intraday high to keep an eye on here. Gold trying to regain 37.25. Bitcoin just below 113. Ethereum back below 4,200, down about 5.5% here today. Let's get into the Mag 7. What do we see here? So the news of Apple's, increase in iPhone sales has them up now 2%, 250. Oof. Big beat. Might have taken that profit a little too early there, but never a bad thing to take profit, especially with a crazy weekend. You could have saw anything happen there. Microsoft down about 57 basis points. Nvidia getting hit a little bit here, down about 60 basis points. Do see Tesla moving to the upside here, 432, 433 now to the upside, breaking out a little bit. So Tesla looks like it wants to break back out to the upside here. If we take a look at the different sectors of the S&P, they are still all negative here. Tesla still moving to the upside. Tick is still slightly down. Advanced decline now down at 21.99 to the negative towards the lows of the day. That is lows of the day now. So we are seeing a little bit of a sell-off here. We see small caps getting hit the hardest so far, down about 41 basis points. Dow Jones down 50 basis points. So we are still seeing a sell-off here. Qs are trying to bounce to the upside. Will they close the gap is the question. Gap is 599 and change here. Q still moving to the upside. Trying to fill that gap. Do see some profit taken in iron, not surprising there. EOS Energy was up earlier, now getting hit pretty hard here. Tempest AI having a really good day today, up 10%. So Tempest AI running here, not really on any news that I saw. And this is an all-time high, 97 and change. So definitely look at Tempest AI to the upside. Teradyne, also another one to the upside here today. Teradyne to the upside. Didn't see any real news on this either. Crypto names that were up getting hit pretty hard here. CIFR Cipher Mining was up, getting hit pretty hard here this morning. On the other side, quantum computing, we saw the big move up, and this is what worries me. And with quantum computing names right now, took that big move up, about to retrace all of it, closed the gap right back down to the downside after gapping up the other day. And you can see it's almost on a full retrace here. 1809 would be a full retrace, but 1877 here. So Qubit to the downside. Rigetti, they did have, I think I saw a $500 million share offering, if I'm not mistaken, on Rigetti. I might be wrong there. That might have been Qubit. Hold on one second. Qubit had a $500 million share offering. Sorry, got that backwards. So quantum computing did, and taking Rigetti, it looks like, with it. As I mentioned, the crypto names down this morning. SharpLink, the Ethereum treasury company from Joseph Lubin, down about 6% here. Open Door Technology down about 7% here this morning today, and starting to find a buyer here in that lower level. We talked about the producer of Tylenol down about 3%, but off lows of the morning. Apple now up almost 2%, still moving to the upside, just broke above 250 here. So really nice move up by Apple here. Same thing, Tesla up 3% now. Short squeezing for sure, 438.76 here. It's about to break its last key resistance all the way up to about 464. You could have a Tesla runaway here. Bitcoin holding up pretty well at this 112.880 here. I do think the good support level, you can see the wick got bought back up to about 112.500. That's sort of the area I'm targeting on a little bit of weakness here for maybe a swing entry to the upside. Gold pulled back a little bit here again, a little bit of profit taking. Again, not very surprising based upon the big move to the upside. Let's take a look at the pumpers here this morning. Metacera, as we've talked about, MTSR up 61% on news of a Pfizer buyout. Trying to see if anything moved after the open. Reynolds up about 4.5%, so that's a nice move to the upside there. Let's see if there's any news on that. Rises on the fact that it's going to be part of the S&P small cap. So nice little move up by Reynolds, the folks that make tinfoil in general, and a lot of other things. But for me, big tinfoil guy. There you go. I use it for my hat. Just kidding. Let's see what else is going on here. Did mention earlier BYD getting hit pretty hard here today. After Berkshire Hathaway has fully exited after a 17-year ride that started in 2008. We saw the breadcrumb in a Berkshire Hathaway Energy filing showing the position at 0 as of March 31, and now multiple outlets are confirming the exit is complete. As you can see, down about 68 basis points here on that news. And remember that Berkshire had already trimmed below 5% last year, ducking further disclosure. Strategically, it echoes Buffett's earlier TSMC exit. Terrific company, but rising geopolitical risk. Sometimes it's a dangerous world outweighs a great business. So that's what we look like, or it looks like from Mr. Buffett here. You see now Q's starting to get a little top-offy. Still negative 329, advanced decline, almost down 3,000 here. So definitive move to the downside still at play. Going to have Mr. Flanagan on in a few seconds here to talk about the DXY. We do see it down at 97.46 here towards the lows of the morning. Bitcoin pulling right back here. Like I said, watch what happens here at that 112.5 area. Fall back below that could give downside to 112 here, or excuse me, 111, where there is a lot of support in the order book. I do see my main man, Mr. Flanagan, getting ready here. We'll give him 1 second, and then we'll get him loaded up and ready to go to talk about everything having to do with the markets this morning. Mr. Flanagan, how are you today?
Good morning, Howard. Hope everybody's had a great weekend. Certainly a pretty awesome tribute viewed yesterday. We got some positives coming into the week, although markets are kind of holding off here. Dollar index beginning to correct itself a little bit lower. I'm a bull in the dollar, but definitely, we must respect that the dollar has been for the entire year a sell-on rally. So that is not a characteristic of trading that's going to disappear quickly. So right now we have the dollar index around 97.40, just below last week's close of 97.65. But I point that out because that's a great level to keep in mind. 97.65, 20 points away. You want to watch that. If we begin to migrate above that, that does have implications. And I am very keen on watching the dollar this week.
Yeah, I think it's going to tell the whole story, right? We're going to want to watch what happens. We do have our friend Mr. Powell on tomorrow in the great state of Rhode Island. I hope he has some good chowder while he's there. But he'll be speaking. What are you expecting there?
I don't think you'll see anything different. I think he's made the pivot. We know that at Jackson Hole. He reinforced that at the meeting last when he cut rates 0.25%. And I think he's going to cling to that new mantra that he has. There's many things you read about stagflation. What is the typical response to stagflation? Well, from a central bank point of view, they're going to hold interest rates because they don't want to see inflation. So we have his favorite inflation coming out on Friday.
Yeah,
and it's expected to be benign, maybe plus 0.1, maybe minus 0.1. But in a sense, we're not seeing the rapid rise in inflation. So I don't think you're going to see him speak out. A lot of people saying 2 more rate cuts this year. But there was a lot of people that on the Fed board that said no change. So I think he'll reinforce the lower mantra, which will be hoping to support the recovery. To deal with stagflation, it's more on creating an increased productivity. Well, You look at computers and everything. That's certainly beginning to become in the works.
Sure.
A second would be to lower production costs. Okay, well, look at oil. Look at the Canada number out today showing the imported products, the raw material, they're lower. So that's another thing in the works that would textbook address stagflation. And the last, of course, would be to boost the supply side output, which, that's the one big misnomer out there. Targeted fiscal responses can help. So I don't really see the stagflation argument, while the data today is clearly arguing that we're in that zone of that definition. I don't see it lasting. So.
Okay. It'll be interesting to see. I have something I want to throw out at you for Wednesday. I want to talk about how dynamic pricing might really change what the inflation numbers are. Because if you've watched companies like Walmart and stuff that are adding these dynamic pricing, that's going to hurt, the pocketbooks of consumers, right? It's going to help companies, but in theory, it's going to hurt the consumer a little bit, I think. And I know it's been done in a lot of different industries. I'm not going to argue whether it's a positive or negative. I more want to do a little research and see if anybody's talking yet about how it might affect those numbers. Because if they're if companies are getting better about pricing, and what I mean by better for them is figuring out times of the day where they, increase the price of snacks at 11:30 at night when drunk people get, to the store, whatever. Well, hopefully they're not driving to the store, but you know what I mean. I am curious. I've been thinking about how that could also, because I've seen it, once Walmart steps in, it means everyone's coming.
Yes, dynamic pricing would be very interesting, but I would view it, dynamic pricing would be tied into this whole AI revolution. And
Right.
therefore, if one increased prices between 11 p.m. and 3 a.m. to catch a crowd like you described, I would look for the corresponding decrease in pricing from 6 a.m.
So the problem is a lot of research done there. Like I said, let's talk on Wednesday about it, because you might want to look. A lot of research, and as you know, it's sort of like surcharges in the gas industry. So in other words, I worked in the liquor industry for a long time, and we were very quick to put gas surcharges every time that gas went up on deliveries, and we almost never took them away until until the customer was literally beating on the doors.
No, that is true. But if you're going to adopt the dynamic pricing model, it's out of the hands of them. We held them longer, because it becomes...
Well, that's what they say, but in other words, there's usually a floor that they won't go below. So that's the thing. So in other words, you buy it at $1.99, that's my low. But if I can get it up and get you to buy a $2.49, I want you to. There isn't much where it goes below that original $1.99. That's where the research that I've started to do comes in. That's why I think, and like I said, because what I think it might do is skew inflation to look higher than it really is. That's what I worry about. That's more what I want to look at it at. Is it going to skew inflation higher? And that's just a new world that we're going to live in, that it's going to be a little bit, is there a number we can put to that? So that's what I want to see.
Yeah, I don't disagree with you, Howard, but it's a two-sided coin, because if inflation begins to drop off, will we see the converse cuts as well? So,
right. Well, yeah. Will it cause more volatility? That's what I mean. I just want to know how it's going to move the numbers. Does it cause more volatility to both sides from it, or is there almost no change and it really doesn't matter because, like you're saying, the skews work their way out? That's what I want to see. I just think it's a number that we'll have to, I would hope the Fed at some point would look at, but they won't. So we need to.
If I use my wife as a barometer to shopping, she will quickly figure out the algorithm and not shop on a Tuesday and a Wednesday, and move her shopping to a Thursday and a Friday when the skew kicks in.
Yeah, no, I'm with you there. I do get that. My wife's very good at that, because gas is the biggest example of dynamic pricing there is. Right. Every week on Saturday, your gas price is going up. Just understand that, and then Sunday night it's coming back down. So, that would be the thing. So I'm with you there. Could be that. what are we looking at in the world of forex here? What do we want to look at first, Mr. Flanagan?
Well, it was a somewhat quiet weekend, so I didn't really see that much going on, other than the expected dollar decline that we're seeing here at the open. I'd still be of the opinion, you're looking at the dollar as, there's still a lot of positives moving in the U.S. I look at the H-1B visa thing that was announced over the weekend as nothing more than another area to arm twist some of our trading partners. Number one, of course, being where the bulk of this applies, having seen it firsthand in my previous role. Some of the brilliant minds are from India. And over the last 15, 20 years, you could go out and make hires of 2 to 3 PhD quality and computer engineers for the cost of one in the United States. So this is a direct implication to India. It's another arm twisting tactic to get them to the table. They're at the table, and I think that we just want to see some progress, and I do expect to see progress very, very shortly.
I actually saw some other talk too about the fact that when you compare it to Singapore and a lot of other nations that compete for this, we're much cheaper. We're actually the cheapest when it comes to those countries. So that's another part. Is I do think that that's a misnomer too. What this person was saying is it could increase it actually, because of the way that this one-time cost is now hit and the fact that it's transferable and some of the other components that play in with the benefits that they're also offering. Where they don't pay taxes on overseas earnings, and some other certain things that are built into it. So, it might not be also as bad for some companies as it sounds.
Exactly. And I would totally agree with that. You cannot be creating a path, a framework of moving the United States to be the leading high-tech company in the country in the world, which we are, but to push AI and leave the rest of the world behind without attracting a very large, higher educated computer scientists, computer programmers from other areas of the world. That has to be part of that equation. So to suddenly act in this manner, it's not consistent with that framework that we have in place. So I don't see it as anything more than a negotiating tool, short run, and will be, just like the tariffs, quickly watered down.
Okay. I wonder, because it's also the gold visas and all those other things that are kicking off. And what I do think that what the president wants to do with it also a little bit that I don't argue is that, like you said, while there are a lot of PhDs that are coming across from that are needed in there, there's also a lot of web developers that aren't needed, that we have plenty here in the US, and it's a way to cut, like you said, the cost of doing business. So I don't have any problem with that being onshored back to the US also. So again, I don't see it as big of a negative as mainstream media has been covering it personally. I think, it's less than a lot of other countries that are already doing it. I think it helps. Maybe, help labor here in the U.S. would not be a bad thing either. And I also seen how much these AI companies are willing to pay to steal executives from each other, right? So to them to pay a $2 million golden visa fee is nothing. So, to me, I actually, I can't believe this. I'm contrarian to your view here, because I actually think that this is a nothing burger. I actually think that this is a positive. I think maybe it does actually bring more revenue in. It does maybe help labor in the U.S., build up at those lower levels of web developers, and it's a win. So I'm going to go with that in this one.
How
I'm shocking you with that, but that is really my view.
I'm right on board with you, because, and I think, you just pointed out a solid reason of why you want to look about what's going on. You come to Quasar Markets, you look at all the people speaking here, because you're right. In this news world right now on a Monday, where everybody's what's out there? What can I talk about? The talking bobbleheads, as I like to say. They
Yep.
come up with, oh, the H1, oh, this is not good, because it's not good, because it's a talking point. You know what? You're right. This is nothing. It's a nothing burger.
Yeah, I mean, if anything, it's a positive. It's a positive to help. We need we need a few things to help our labor market. There is no doubt that hiring is that's where stagflation is, in my opinion. It's in the hiring part. Okay. So we need something to boost that. Does this mean more of these kids coming out of school, instead of working at restaurants, can get jobs working as web developers, as JavaScript operators, as these, not, like you said, not PhD level AI developers, but we're also onboarding from outside the US a lot of just cheap, what I would call semi-skilled labor. Is that the word? I don't want to downgrade that because I couldn't do any of it. So I don't want to downgrade it, but you know what I mean? It's not that PhD level that maybe is being this could help, our recent college grads, I hope.
Old guys like me and you, we have the ability to look back and offer a very clear and concise opinion about what we've witnessed and what we've experienced. So to any of the viewers, college educated, anybody under 30 years old, today, the opportunity in this world couldn't be better. Talent-wise, you need to refine your talents into the world ahead. If you want to go to college and come out as an English lit major and look for a job in teaching, that's awesome, because great teachers are needed throughout this country. However, if you want to come and look into the world where there's possible growth in your financial well-being or in your career ability to grow and expand your own mind, look into this technology. It doesn't have to be a PhD in computer engineering or astrophysicist. It doesn't need to be. It needs to be practical into the computer world. It can be mathematics. It can be just science. But these are the areas, that you should be looking forward and to get into some of these bigger companies. My dad and my grandfather, both of them, God rest their souls, always said, get in with a big company. Now, this may not apply today, but the idea, get into a big company. Once you're in and your toe is in there, you have an expanded view of things, because big companies love to hire within. In other words, when a job comes, first they look into their internal pool of workers and offer transferable positions. So that would be my advice. It is an incredible world ahead of us, and there is so much growth opportunities. You just have to put one foot in front of the other and start moving in that direction with it.
Yeah, I couldn't agree more. And then it's also about learning how to use that technology. People who understand how to put the right queries in to, AI are going to be needed. That's like, I've been talking with my wife who works in a form of accounting, that, she better get on board with AI, learn it and use it in her everyday role, so that she puts herself as a valuable asset as opposed to an expendable asset. Because that's going to be the difference, is folks that know how to use it and can help guide it to do the job of many people are the ones that are still going to be always needed.
Yeah, and take it from an old guy, and and I'm not kidding around. I force myself each and every day to stay up with the groks, all these new AI features in the computers. I force myself to just go in and ask questions and dabble and just try to find a rabbit hole that I can suddenly go down and learn how these computers answer me and what type of value that has in my life. And I find it somewhat difficult, but I force myself. I did the same thing my entire career with the use of cell phones. Okay, so I had the idea I started in 1979, and so phones were just beginning to come out. And I remember Panasonic came out with one of these phones that was coated in this hard rubber. And literally, I took the phone in a trading room and I went, hey, everybody, look at this. And I threw it across the room against the wall, picked it up. and it still worked. And everybody looked at me like, because technology in those early days, if you dropped it or knocked it over in the wrong way, it broke. So,
Absolutely.
and I've always forced myself to stay involved in technology because that was my way of keeping myself abreast of what's changing out there and how I could use it and how I could use it to further my own career. So I know we're getting a little reflective here and away from the markets, but I just wanted to offer that to some of the viewers that, force yourself in. Don't sit there and say, I don't understand it. That's the wrong answer. Get involved. But we do have a lot of Fed speakers this week. We have a lot of international central bank speakers. So, you know what? Here's an example. When you wake up tomorrow morning, type in, what did central bank speakers say overnight? See what the systems tell you. It gives you an itemized bullet by bullet. Find out which countries. If you look at the world today, the Fed, 4.25%, Bank of England, 4%. Those are the outliers as to high interest rates. But from a historical perspective, that's a low interest rate. Then you've got ECB, 2%, Bank of Japan, 0.5%, Bank of Canada, 2.5%. And this week, you have the Swiss National Bank meeting on the 25th, and they're at zero. Do they go to negative? So what I'm trying to emphasize, in a world where everybody's talking inflation, 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 why is everybody's interest rate so low?
Right.
So it's just a talking point. Inflation is not creeping up. And if it is, it's 0.1%. That's not what you would call a major inflationary trend. So, look at these things and question them. And now finally, we have the ability to question a computer right at the side of our desk and get an answer. So
yeah, it's amazing.
That's my 2 cents and my spiel for you.
Awesome. What are we watching this week, though, Mr. Flanagan? Because I love it.
We have GDP coming out on Thursday, jobless claims. That's going to be big. Home sales, number 2. We still have the recent comments from our Treasury Secretary talking about declaring a home building or a home emergency,
right?
Which would bring in perhaps some fiscal side stimulus to get the housing market moving. So let's watch those numbers carefully. On Wednesday, home sales, and on Thursday, existing home sales. Those two will be big numbers. And then you've got a whole host of PMIs on Tuesday with Jay Powell on Tuesday. So Tuesday, Wednesday seems to be your take in the data, new data, with Thursday getting ready to react. I'm kind of thinking that we're going to be in a bit of a sideways pattern. I watched the dollar carefully here because if the dollar is not making progress to the downside, it's an expensive short to hold, especially against Europe. And I'm watching France and the European situation, as well as the UK. The UK's got a big budget coming out, and their numbers are not helping out.
Right.
And France has a destabilized government, number 2 largest country in Europe. So these are 2 things, the sterling and the euro, which I'm looking to fade and buy dollars against.
Awesome. I love it. Mr. Flanagan, take us away. Thank you like always. What do you got for us?
Well, money moves first, and it's why I emphasize watching currencies, not every day. But when trends begin to move, you'll always begin to see it in the dollar's value. Right now, what we can look at is what's happened this year. The dollar has had one of the largest moves it's had since the 70s. Therefore, do you want to stay in that move, or do you want to look to the other side of the boat and drop a line in because nobody's on the other side of the boat fishing? And that's where I'm looking. I'm looking for the subtleties that begin to turn. A stronger dollar immediately reduces inflation in the U.S., so that could be a big change in the dynamics within the U.S. I think when the dollar begins to break, watch the U.S. begin to move up as a result.
Absolutely. I love it. Well, from Quasar Markets, thank you so much for joining us. Like always, I'll be back tomorrow morning trying to get Peter Thomas to join us to talk about that new all-time high in gold and the 14-year high in silver. So we will see you at 9 a.m. tomorrow.